All right, today we have Michael Schwin with us from Longbridge Financial. He is a reverse mortgage specialist. Michael, thank you for joining us today. How are you doing?
Doing good. Thanks for having me, Chris. I appreciate it.
And you're in Dallas? Where are you
I'm
today?
in Houston, Texas.
Okay, Houston, Texas.
Yes,
So,
sir.
um, our show today is about reverse mortgages, how they help people in the retirement planning process. A little bit later on, I want to get down to brass tacks. I want to talk about why it is that reverse mortgage has such a bad stigma today. But before we do, can you just tell me briefly about Longbridge Financial and what you guys do?
Yeah, so we're a direct lender. We strictly do reverse mortgages. We do have a wholesale division. We work with brokerages and things like that. But yeah, strictly reverse mortgages is what we do.
hmm So, for those of our listeners out there that maybe don't quite understand how a reverse mortgage works, maybe just like a kind of a
Mhm.
30,000 overview, how is a reverse mortgage usually work? If you could explain it to people.
Sure. So I mean the definition or the kind of the high view summary I give people is just a refinance for seniors with no required monthly mortgage payments. That's kind of your high view version of it. And then I would say it functions similarly to a HELOC or home equity line of credit. And I know a lot of people are familiar with those. Again, the main difference, you don't have a monthly payment, you know.
Yeah. And
Yeah.
so, go ahead.
Yeah, I was gonna say just some of the basics, couple more basics about it. We do refinance all liens and mortgages that you currently have on the property. So for people that are paid off, it's just a credit line, but we do refinance if you have a lien on there currently. Age requirements are 62 to get one. It's 55 in some states. We have a jumbo proprietary, and I can get you some of those details later on if you'd like. Um, and then one other point that I want to touch on is the loan amount. A lot of people want to know roughly how much they can get. It's a pretty big range. The older you are, the more you get. Starting at 62, you're getting about 35%. If you get up in your 90s, you get close to 60%,
hmm
and that's the percentage of the home value that you're able to lend, or that
hmm
we're able to lend rather.
So, for example, if there's a $200,000 home, maybe you could get half of that, depending on your age.
Right. And if you're on kind of the older end of the spectrum, you're going to be getting closer to 50%.
Yeah.
Call it 35, 40% for people in their 60s and
hmm
70s right now. So,
Okay, so let's break this down. So, I'm a
yeah.
retired couple. We've had some hiccups along the way in life. One of us got divorced. We lost half of our 401k to our ex spouse. We've had some illnesses or whatever. And we've just found ourselves in a position where we're having struggles with our financial advisor. He's going through the numbers and he's telling us this just really isn't working. You're there, but you're not quite there. And the
Hmm.
financial advisor brings us the idea of a reverse mortgage. And the first thing we get when we talk to our prospects, our clients, or anybody about reverse mortgage, we're hearing, no way, I'm never doing that. It's like the devil, right? You
Yeah.
probably get this a lot. Do you see this every day, or how often do you get this type of reaction? And what do you explain to people when they give you that type of reaction to reverse mortgages?
Yeah, so I do get that a lot. It does get a bad rap. So a lot of it is not warranted, and I can cover. There's a handful of myths or just key points that people don't may not know. The first and biggest one is we don't take your home. We don't take ownership
Nobody
of it.
loses their house.
Nobody loses their house, and actually title doesn't even get altered, other than us placing a lien on the property. But you still remain an owner of the home and stay on title. You could also have kids if you want them to inherit it when you pass. That can continue as normal with the reverse mortgage. The other thing is too, if the kids don't want the home, they want to know, can they sell it? Yes, they can sell the home just like a regular mortgage, right? You just pay off what you owe plus interest, and then they can walk away with a lot of cash depending on what the home's worth at that time.
hmm Yeah.
Um, one other thing I want to mention too, people worry about getting foreclosed on, or again losing the home in some sense. And again, the reason the situations where that would happen is if somebody's no longer living in the home, they've vacated the home, And if they're not paying their property taxes or homeowners insurance, which happens anyway, right? If you're not paying those things, um, and then if the property falls into disrepair, if you're not taking care of it, then that would also be a trigger to foreclose. But other than that, I mean, as long as you keep up with the normal things that you would as a homeowner, you're not having to make these payments, and yeah, nobody's taking your home or doing anything like that.
So when
So
I run a reverse mortgage through a financial plan, that same financial plan I'm talking about where you're okay, but you're not great and you really need something to put you over the edge, it in every case helps out the success, the chances of success in that retirement plan. And when we're looking
yep.
at this, in many cases, large asset that these families have, and it goes unused. And unfortunately, and you know this to be true, the majority
Mhm.
of retirees have this home. It's close to their heart. They live there half of their life. And they just have this sentimental feeling they don't want to get rid of it, which is understandable. But tell
Mhm.
me, Mike, what's the first thing that generally happens when mom and dad pass away? What do the kids do with the house?
A lot of them do sell it.
They sell it.
A
Okay,
lot of
so
them do
what do you
sell it.
hold? And it's the same thing with your knickknacks that
Yeah,
you have in your basement, the crap you have up in your
can't
attic.
take it with
The
you.
first thing they do is throw it away. So, it's
Mhm.
not like you're selling the farm. They're going to sell it anyway. And, it's funny how our minds, how American retirement psychology works. When I'm
That's right.
talking about Social Security, people have worked so hard for that over their entire life. They've been working hard, they've been getting that Social Security. And when it's time to retire, the first thing they want to do is grab that Social Security, take advantage of that asset. And that's not always the right thing to do, but sometimes it is. In much the same way, the average retiree has worked hard in their life. They have done a lot to save for that house, to pay that house off. You would think the first thing they'd want to do is use that asset. The mindset is completely different, but the mechanics behind it is the same. Something you've worked so hard for, use it to improve the chances of retirement success. I couldn't agree
Yeah.
with you more about the bad stigma. I have done a lot of research over the years, and specifically on reverse mortgages. I believe there are more than one way to take value from your home. So, one way, correct me if I'm wrong, is to start a series of monthly payments for the rest of your life that last forever, whether you live to be 85 or 115. And other people might use a reverse mortgage in another way, maybe kind of getting like a chunk of money to pay off some debt or just have out there in the future that they can rely upon should they need it. Is that generally the correct way to think about these reverse mortgages?
Yeah, that's right. You could do monthly payments. You could also have sort of a combination of monthly payments and a line of credit, or just have a line of credit for the folks that maybe don't have a mortgage and feel like they don't even need funds right now. Maybe they're in a good position. It can't hurt to set up just a line of credit and not even make a draw on it. And an important point to that too, the line of credit does have a growth factor, which is going to be tied to the interest rate plus a 0.5%. So if you're looking at, and I'll tell you right now, the average interest rate is about 7% on pretty much mortgages in general, and our reverse mortgages, what we're looking at. So you'll have a line of credit, maybe you don't need it, it's growing at 7.5% annually.
Right.
Um, and that could also be used to offset your closing costs too. Another thing that people can be concerned about on the reverse mortgage, you've got the line of credit that grows, can cover some of the costs for you as well.
So, for my listeners, let's just go through two basic examples that we just talked about, just so they can
Mhm.
understand exactly what we're talking about. And of course, these numbers that we're talking about are just estimates. Of course, every situation
Mhm.
is different, but we have a $200,000 home. And one of the things we can do with our reverse mortgage is get a monthly payment for the rest of our lives. Maybe that's $700 a month for the rest of our life. And that again lasts until we die. When we die, if there's still value in the home, we get that value. We might have a $200,000 home that we have taken $225,000 of payments out of. We've actually taken more than what the home is worth, but because that insurance is there, this is a federal program, we don't lose our home. Our children don't owe anybody $25,000. We're not ever underwater in that home. That is the way I like to put it into a financial plan.
Correct.
just a stream of inflows every month that you can rely on, just like you can rely on Social Security. But to your point, Mike, if that $200,000 home, if I can get an $80,000 line of credit, I
Hmm.
can let that sit there. And that $80,000 I don't need right now, but I have it in my back pocket in case 10 years down the road I need it, or 20 years down the road I need it. And that $80,000 is no longer $80,000, is it? It's something much more.
That's correct. Yeah, and I worked up an amortization schedule, just kind of an example, and I used $300,000 for the home value, and I used a 62-year-old, and so they're getting close to a third of the home value. But just for this example, Chris, they're getting about 81,000 and some change in the line of credit out of the gate, right? If they appraise for 300, if they don't touch that for 10 years, in 10 years, that line of credit is worth 167,000 and some change. And
Boom.
again, just estimating where the interest rates are right now.
If
But
you need it,
I mean, that's
right?
huge. And yeah, exactly. And that's doubling uh, your investment there. And the other thing too, to tie into what we're talking about, I agree. Seniors are all of them are on Social Security or some kind of fixed income. They've got their retirement accounts if they have those, and then they have their home. And this can also be a tool to preserve your IRA or a retirement accounts. If you don't want to tap those, tap your home equity, tap your line of credit, and you can leave those assets under management with Chris, if you will.
Now,
So,
we're not going to talk about, thank you for that, Mike. We're not going to talk about taxes a lot. And I'm a CPA and we could talk about taxes all day long. But
mhm,
just very simply,
yeah,
is the reverse mortgage a very tax efficient way to add income to your situation?
it is. It is. It doesn't get taxed as income, by the way. And if you're making payments, you can do the interest payment write off on your tax returns or deduction at the end of the year.
Right.
So,
This is a way to get income which is not taxed. You're taking value out of your home, the value of which you already paid taxes on when you purchased that home. Therefore, when you're tapping into this resource, it is not impacting you from a tax standpoint, generally speaking. I think that's an important point.
correct,
You said
correct.
earlier something that really piqued my interest. Starting early, you should use that example of that $81,000 line of credit that doubled after, was it 10 years?
Correct. 10 years.
Okay. And you pointed out one of the reasons that this is looking so attractive right now, why that line of credit increases is due to the interest rates. We all know right now, as we're talking here in early 2024, that interest rates are very high. Um, Generally speaking, though, we would want to, if we're just looking at one factor and one factor alone, interest rates, we would want to wait, if we could, for a lower interest rate environment. Is that a fair statement, or is that not necessarily the case?
Yeah, and again, I would say for a traditional mortgage, that is the go-to. It's going to save you on your payment, etc. But if you're in a situation where, again, especially if you don't have kids, where you're needing to preserve the equity, kids are all set, you've got a line of credit. Now is actually a great time to take advantage of it. Again, even if you don't need to tap anything, just let that line of credit ride. And if the rates are a little bit elevated, then your line of credit will be growing at a little bit higher rate every year as
Right.
well.
So is that offset there? The cost is more, but if you're letting that line of credit build, it actually works out to your benefit. Do you think the four founders who wrote the codes for reverse mortgages foresaw the amazing opportunity that they gave American taxpayers, that they could get this wonderful growth at 7% line of credit? Do you think
Hmm.
they foresaw people using reverse mortgages in that way?
I don't believe that they did. I think a lot of people still think it's a last resort, but it can be an investment tool like we're demonstrating now. It can be done in advance, right?
Yeah.
And as a safety net. So
So generally
yeah,
speaking, according to my research, it's better generally when we're talking about retirement planning to take that reverse mortgage sooner than later. Do you agree on that? And if so,
yes,
is it,
sir.
why is it? Is it because of the building of the credit line, or is there just other reasons why you might want to take that earlier as opposed to later?
Yeah, definitely the building of the credit line, and then also home appreciation. Again, you can in a sense offset those closing costs early on if you get it early on by having that appreciation cover it, and then also the line of credit growth,
Hmm.
um, and be worth that much more to you down the road if you when it's time to tap it.
So, Michael, I want to, in a second here, give you the opportunity to tell people how, if they have any questions, they can get in contact with you. But before I do, I have one more question.
Hmm.
I understand that if an American couple wants to get a reverse mortgage and they've talked to their financial advisor and everyone has agreed that it potentially can make sense in helping the chances of retirement success, there is one hurdle that I'm aware of that they have to go through, and it's some sort of counseling session. Is that right?
That's right. Yeah. So the FHA, again, they
I mean, let me
kind of make the
interrupt you.
rules on this.
People don't want to take a college course in reverse mortgages. Is this like a huge thing, or is this something that is easy to get through? What's that look like?
It's fairly easy. I mean, and again, it may be a little bit rudimentary for people that do have a financial background, but it's a requirement to get the loan done, and the FHA put it in there to make sure that seniors are understanding what the loan is and how it works, and that they understand the figures. And it's usually about an hour and some change, and you can knock it out over the phone. You don't have to go anywhere in person.
Okay.
Um, and just think of it as a review,
Yeah.
to make sure you understand the product.
That makes sense. So there's so much more we could dive into today, Michael. I appreciate your time. Michael Schwinn from Longbridge Financial, thank you for joining us. If any of our listeners wanted to reach out and just understand a little bit more of the basics or have a question about reverse mortgage, what's the best way to get a hold of you?
Yeah, I'd be happy to provide my direct phone number and email address. If you want me to read that out right now, my phone
Yeah,
line's 346-517-0921. Then email is M as in Michael, SCHWIN at longbridge-financial.com.
that's great. Michael, we appreciate your expertise today in the world of reverse mortgages. They're not a bad thing. They are not the devil. In
That's
fact,
right.
when we add them to a retirement plan, they most often are very successful in improving the chances of your safe and sound retirement. Thanks for joining us today, Michael. Have a great day there in Houston, Texas.
Yes, sir. Thanks for your time, Chris.
All right, take care.